Right, so in this video, I'm going to talk through more detail over how to diversify your trading accounts using the Banker EA, or even edge stuff as well, because it all falls in really on some of the trend and ranging concepts anyway. And just talk you through how you can combine the multiple different mechanical strategies that we offer to either add more confluence, or how you can piece those pieces together for trend trading strategies and for range trading strategies. Okay, so here's an example. We've got gold as an example here. It could be any pair, and you could replicate this for multiple pairs on one account even. Okay, and this is to understand that what we've got here is a range strategy, a trend strategy, an against trend strategy on our recent banker update, and an inverse news strategy. So ultimately, these three strategies would be pausing for news, ignoring that time window where high impact news is going to cause you potential drama. But then you could run a different news set that just trades a different approach within that time window in a different way that you've back tested to, because that's going to diversify that account and capitalize on those few hours even more, even if it's just a small amount of profit. When you combine these together, they all add up, especially if you do it on multiple pairs. Okay, so diversification is key, as I've covered in various videos for that reason. So ultimately, in order to find these strategies here, we need to be looking at using RSI, the EMA, and the ADX to do that. Okay, so this is what I'm going to run through right now. Now, RSI stands for Relative Strength Index. Now, it's normally used by selling when we get into the overbought condition and buying when we get into the oversold condition. So for example, normally we look at levels like 60, 40, 70, 30. They're out of 100. And when we get up here, normally we'd look to find a sell position. And when we get down here, a buy position. That's normal RSI style trading. Now with our EA, we can look at various different levels of that. The simulated delay sequences can help improve our position by the time it opens in the live market to catch that elasticity in price. So price can go up, but then it can pull back. And we're looking for those reversal points to get a little bit out of the market at that time. Now, with our EA and the reverse logic, we can also reverse that. So obviously, if it's in overbought, it has been going up, and we can look to buy in those positions as well. And likewise, when we're in oversold, we can look to sell. Inverting and reversing the normal logic that people would normally trade with RSI, but we can do that within the Banker EA. Okay. Now, if we move on to trading EMAs, exponential moving average. Now, how we trade using EMAs is by using three: a fast, a medium, and a slow. Now, that could be a 10, a 20, and a 50, or whatever our inputs are. We've pre-programmed them to make sure you're not overfitting stuff and coming up with random EMAs. I think one might be 10, 50, 200, etc. Some of those are suited to short-term trading strategies on the 1 minute, 5 minute, and some are more longer-term, hour 1, 4 hour, for example. So by looking at EMAs, when the fast is above the medium and the medium's above the slow and they're in perfect order, that indicates an uptrend. Okay, and likewise, when they're the opposite way on, that indicates a downtrend. Now, that enables us to also find trending markets up or down. But the key part also is if the EMAs are all muddled together, so they're not above each other or stacked in any form of order, then that indicates that the market hasn't got clear direction and it's a ranging market. Okay. Then we look at ADX, which stands for Average Directional Index. And this enables us to identify the strength of a particular move in the market. Okay. Now, normally how that works is anything above the 20-25 level indicates there's strength and momentum in the market. It's either trending up or trending down, but there's a strong move either way. Now, if that level, that threshold is around or below the 20 level, then that would indicate a ranging market. Okay, because it's not going anywhere here. Okay. Now, what we need to consider knowing those three core mechanics of our strategies are how can we use them together to add more confluence to our approaches and to filter out trades that aren't really what we want. Well, there's numerous different ways we could do it. So we could combine the RSI with the EMA looking for just trending moves by combining these two. But ultimately what that means is that we're going to be looking for pullbacks in a continuation of an uptrend. Yeah. So it might be that the price has shot up and we're in an uptrend. Well, when price comes back down here, we could look for that buy. Yeah. Because it's dropped, it's actually oversold, but we're in an uptrend. So we would look to buy then. That's just one idea that we could use both of those together. Now we could also use the EMA and ADX together as well. So if we're looking for trend trading with the EMA, so they're all in perfect order, and then we're looking for an ADX to be above a threshold, which tells us A, markets are trending and there's a real strength to that move. So let's get in and let's make a little bit of that move too. We could use them individually So we don't have to use them together. Yeah, we could just look for when the markets are moving with an impulse without the EMAs been stacked together, or we could just look for the EMAs been stacked together without ADX2. So again, there's no right or wrong with this. It's just a matter of understanding the fundamentals and the mechanics behind each strategy to enable you to create diversification in your trading account. Now, this could work the same with ranging markets here. So we could look for EMAs that are ranging, so they're all muddled together, with an ADX that is below a threshold. So then we've got two approaches at ranging markets. Again, we could use them together or we could use them individually. Okay. Another thing to contemplate and understand as well. So when might be the best time to trade a trending set? Well, markets are more likely going to trend when the US volume is open, especially if you're trading a USD based pair like gold or US 30. The movement happens within the US session. So you could use custom trading times to explore your optimization within that time window. Okay. When are markets ranging? Well, let's use gold as an example. Maybe it's going to range more within the Asian session outside of those US markets as well. So these are things that you can explore in your testing. And this is just an example of using that critical thinking to understand the knowledge of the strategies, any assumptions that you might be making, the data that's going to come out the other end of your testing, and pulling it all together into making the decisions and choices to run the approaches and set your trading plan and your diversification in your trading account. So as a summary, in this video, I've talked through what RSI is, how it can be traded. Same with EMAs, what they are, how to identify trending and ranging markets, and also ADX, strength of the trend, above or below a threshold, and how you can pull them all together to find different confluences or not, subject to your test results and how you set up your optimizations.